For most people, an annual report is this super dense 100-page document that, let's be honest, probably just gathers dust. But what if I told you that for a smart entrepreneur, it's actually a treasure map, a map filled with incredible competitive intelligence, and today we're going to learn how to read that map.
So, let's say you need to understand a competitor, a potential partner, or even get a brutally honest look at your own business. Where would you turn? Forget the fancy press releases, forget the slick marketing hype. Where do you find the real story?
Believe it or not, the answer is right there, in that dusty old annual report. It is the ultimate source of truth, a seriously powerful and often completely overlooked tool that can give you a massive edge.
Okay, here's our game plan. First, we're going to talk about why this document is such a secret weapon. Then I'll give you a map so you can read it without getting lost. We'll break down the 3 big financial stories every report tells, build a quick analyst toolkit for you, and finally, figure out how to turn all that data into killer decisions.
So first up, let's really dig into why this document, which most people ignore, is so incredibly valuable, especially for entrepreneurs like us who need to make smart moves and fast. And that's the key right there. See, everything else a company puts out can be spun. It can be promotional. But the annual report, it's a formal, audited record. This is where a company has to tell the unvarnished truth about how they did. It's the foundation for any real analysis.
All right, these reports can be absolute beasts. We all know that. The trick isn't to read every single word. Who has time for that? It's about knowing exactly where to look. So let's create a mental map to help you navigate it like a total pro.
Okay, first thing you do, think of the report in 2 parts. You've got the fluff, the glossy photos, the big optimistic letters. You can pretty much just skim that. And then you have the formal sections. This, my friends, is where the gold is buried, and it's where we're going to spend our time. So let's pinpoint these high-value areas. First, the MD&A, that's the Management Discussion and Analysis. This is awesome because it's where management explains the story behind the numbers. Then you have the financial statements. That's the hard data. The notes to those financials are also super important. They tell you the rules of the game they're playing by. And hey, even the letter to shareholders gives you the official story they want the world to believe. All right, let's get to the heart of the report, the 3 main financial statements. Now, don't think of these as 3 separate things. Think of them as 3 chapters of one single, connected story about a company's real financial health.
First chapter, the income statement. This tells you how the company performed over a specific time period, like a quarter or a year. The big question it answers is super simple. Did they make money or lose money? That's it.
And here's how that story unfolds. You start at the top with revenue, take away the cost of what they sold, and boom, you have gross profit. Then you take away their operating expenses to get operating income. This shows how efficient their main business is. And finally, after you pay off taxes and interest, you get to the famous bottom line, net income. Now, for an entrepreneur, the real juice here is in the margins. A nice, fat gross margin tells you the company has pricing power. A strong operating margin tells you they run a really tight ship. These are like the vital signs of a healthy business.
Okay, next up, the balance sheet. Now, if the income statement was a movie covering a whole year, the balance sheet is just a single photograph. It's a snapshot on one specific day, say December 31st, of everything the company owns and everything it owes.
So why should you care? One word, resilience. A company with good liquidity can pay its bills on time. A company with good solvency isn't getting crushed by debt. When things get tough out there, a strong balance sheet is what makes a company a survivor.
And finally, we get to my personal favorite, the cash flow statement. I love this one because it's the hardest to fudge with accounting games. It follows the actual, real cash. You know the saying, profit is an opinion, cash is a fact? Well, this statement gives you the facts.
And the number one thing to look for here is cash flow from operations, or CFO. Is the company's main gig, whatever they sell, actually generating cash? If the answer is a big yes, you're looking at a self-sustaining business. If not, it might just be staying afloat with loans or other financing, and that's not going to last forever.
Okay, now that we understand the 3 stories, let's put together a simple but really powerful analyst toolkit. With just a few quick calculations, you can get a surprisingly good diagnosis of a company's health.
First up, return on equity, or ROE. Think of this as a report card for the management team. It answers the question, are they good at taking investors' money and turning it into more money? A high ROE usually means you've got a very sharp team at the wheel.
Now, if you're looking at a business that sells actual stuff, inventory turnover is absolutely critical. It tells you how fast products are flying off the shelves. High turnover? Fantastic. Low turnover? That could be a huge red flag that they're stuck with a bunch of stuff nobody wants anymore.
Next, debt to EBITDA. This is a classic ratio that banks and lenders use all the time. It gives you a really quick and clean snapshot of whether a company has bitten off more debt than it can chew. It's all about risk.
And here's a handy little rule of thumb for you. Generally speaking, a ratio somewhere in the 3 to 5 times range is considered pretty healthy and manageable. If you see a number way higher than that, you should probably start asking some questions about why they're so leveraged.
So let's bring it all home. We've gone from looking at the annual report as this boring, mandatory document to seeing it for what it truly is, an incredible opportunity, a source of amazing insight.
So, let's recap the big ideas. The annual report is your #1 source of truth. You're going to zero in on the MD&A and the financial statements. You'll remember that those 3 statements work together to tell the whole story. And you'll use a few key ratios to get a quick health check on any company.
You now have the key. You have the framework to decode the real story behind any public company. You can size up your competition, you can check out potential partners, you can even benchmark your own business against the very best. All that information is just sitting there, waiting for you. So the only real question is, whose report are you going to unlock first?